Wall Street financed both sides of World War II, and they're doing it again right now. 1943, your grandfather bought war bonds at 2.5% interest. Patriotic duty, support the troops, fight the Nazis. Meanwhile, JP Morgan lent to Hitler at 4.5%. Same bank, same war, both sides. $185 billion from American families, $4.5 billion profit for Wall Street. Soldiers died, bankers got richer. January 3rd, 2026. Maduro arrested. Venezuelan bonds jumped from 20 cents to 43 cents in 1 week. Your 401k just profited from regime change. The pattern never stopped. It just got more sophisticated. There's a 4-stage mechanism running since WWI. We're watching stage 3 execute right now. And by the end of this, you'll see exactly who's profiting while soldiers bleed. 1917, a mother in Ohio stands in line at the post office. She's buying Liberty bonds, $100, 2.5% interest. The poster behind her says, "Your country needs you to buy bonds. Patriotic duty, support the troops, defeat the Kaiser." She hands over money she doesn't have because 4 celebrities just did a rally in her town square telling her it's what real Americans do. That same day, JP Morgan's New York office wires $150 million to Britain at 4.5% interest. And through their Swiss subsidiary, they wire another $80 million to Germany, also at 4.5%. Same bank, same war, both sides. This is stage 1. Create the propaganda, make it emotional, make it patriotic, make it impossible to say no without looking like a traitor. The Liberty Bond campaign was the largest marketing operation in American history up to that point. Movie stars, athletes, politicians, they all got behind it. Charlie Chaplin sold bonds, Douglas Fairbanks sold bonds, even the Boy Scouts went door to door selling bonds. 21 billion sold to American families. Teachers bought bonds, factory workers bought bonds. Farmers mortgaged land to buy bonds. They sacrificed their savings because they were told it was their duty, that it was how you support the men dying in France. 2.5% interest sounds reasonable until you realize inflation was running at 3.8% during the war years. Guaranteed loss in real terms. They called it patriotic. It was a scam by design. Stage 2, banks profit both sides. JP Morgan didn't just lend to the Allies. That's the story in the textbooks. The reality is more sophisticated. Morgan's German subsidiary, operating through neutral Swiss banks, financed 68% of German war bonds issued between 1914 and 1917, $420 million channeled through Basel and Zurich into the German war machine. They couldn't do it directly. That would be treason. So they used subsidiaries and neutral intermediaries. The structure was designed to be deniable, and it worked. $1.5 billion to Britain and France at 4.5%. Hundreds of millions to Germany through Switzerland at the same rate. The German bullets that killed American soldiers were financed by the same bank that was selling Liberty bonds to their mothers. And here's the part they don't teach you. Bernard Baruch, President Wilson's chief economic advisor during the war, the man who decided which industries got priority, which companies got contracts, was a JP Morgan partner. He made those decisions while having a direct financial interest in the outcome. Conflict of interest, not if nobody asks the question, and nobody did. Stage 3, the cover-up. The war ends November 11th, 1918. Armistice signed, soldiers come home, and the accounting begins. Morgan's profit from war financing, $568 million in 1918. That's over $10 billion in today's money from both sides. Prosecutions for financing the enemy, 0. Congressional investigations, none that went anywhere. Instead, the men who ran this operation got promoted. The Dulles brothers, Allen and John Foster. Their law firm, Sullivan and Cromwell, spent the 1920s defending German assets that had been seized during the war, getting them returned to their original owners. Allen Dulles becomes CIA director in 1953. John Foster Dulles becomes Secretary of State in 1953. They didn't just get away with it. They ran American foreign policy for a decade. Stage 4, create the next war's funding structure. The Treaty of Versailles imposed $33 billion in reparations on Germany, an amount specifically designed to be unpayable, designed to create economic instability, designed to guarantee another crisis. And who structured those reparation loans? Who decided the terms? The same banks that financed World War I. Morgan and Rockefeller were already positioning for the next round by 1920. They knew what was coming because they designed the collapse. $21 billion from American families who bought bonds at a guaranteed loss. $568 million profit for Morgan from financing both sides. Zero prosecutions. Soldiers died in trenches at Verdun and the Somme. Bankers retired to Connecticut estates. But World War I was just the test run. The mechanism worked. They refined it. They perfected the structure. And World War II is where it went from millions to billions, where the same families did it again on a bigger scale with better cover. If this pattern sounds familiar, hit subscribe, because what happened in 2026 with Venezuela follows the exact same 4 stages. And this time, it's not Liberty Bonds. It's your retirement fund that's profiting. October 20th, 1942. While your grandfather is preparing to ship out to Europe, the United States government seizes Union Banking Corporation under the Trading with Enemy Act. Reason: financing Hitler, the bank's director, Prescott Bush. Let me repeat that. Prescott Bush managing a bank that funneled money to the Third Reich from 1933 to 1942. 9 years through Fritz Thyssen, Hitler's primary financier. Over $3 million confirmed, likely much more that was never traced. The government seizes the assets, files the paperwork, and then nothing happens. No charges filed, no trial, no prosecution. Prescott Bush was never charged with a crime. 1952, he becomes a U.S. Senator. His son, George H.W. Bush, becomes president in 1989. His grandson, George W. Bush, becomes president in 2001. Crime doesn't just pay, it becomes a dynasty. That's not an accident. That's stage 4 of the pattern. Finance both sides, escape prosecution, convert money into political power. But Bush wasn't alone. Standard Oil, owned by the Rockefellers, was doing something even more direct. From 1939 to 1943, they sold tetrayield to IG Farben. That's the aviation fuel additive that made high-altitude flight possible. The Luftwaffe ran on fuel made possible by Rockefeller's chemical. IG Farben wasn't just any German company. They made Cyclone B, the gas used in Avits. Standard Oil executives knew who they were selling to. They knew what the fuel would be used for, and they kept selling even after Pearl Harbor, even after America entered the war. A Senate investigation in 1942 confirmed the sales continued after December 7, 1941. After we were officially at war with Germany, the Justice Department prepared a case, and then in 1943, they dropped it. National interest, that was the excuse. Can't prosecute Rockefeller during a war, bad for morale. Consequence: Rockefeller wealth increased 250% during the war years. $4 trillion in today's money, built on fuel sales to the Nazi war machine. Now, here's the mechanism most people miss. War bonds round 2 Series E bonds. This time, the government convinced American families to buy bonds at 1.83% interest, lowest rate yet. $185 billion sold over the course of the war. But here's the twist. The government doesn't fund the war with those bonds. They borrow from banks at 2.5%. The banks create the money, lend it to the government. The government pays interest to the banks, and the banks make the difference. $185 billion from families at 1.83%, 83%. Banks profit $12 billion over 10 years from the spread, but that's just the direct lending. The real money was in war contracts, reconstruction loans, and positioning for post-war dominance. Families who bought those bonds, negative 18% real return after inflation, they lost money again. Banks who lent to the government, positive 34% real return, they made money again. Your grandfather bought bonds to fight fascism. J.P. Morgan financed both sides. Your grandfather died on Omaha Beach. The banker who funded the bullet retired to a mansion. Post-war, the pattern completes. Allen Dulles, the lawyer who spent the 1930s protecting Nazi assets for Sullivan and Cromwell, becomes CIA director in 1953. John McCoy, who as Assistant Secretary of War helped protect Nazi banking interests, becomes president of the World Bank in 1947. Prescott Bush becomes a senator. Zero accountability. All promotions. The people who financed the enemy became the people who ran the peace. Families lost 18% real value on bonds. Banks made 34%. Soldiers died. Bankers became presidents. That's not a failure of the system. That's the system working exactly as designed. The mechanism didn't disappear after World War II. It went underground. War bonds became sovereign debt. Patriotic propaganda became humanitarian intervention. And your 401k became the vehicle. Post-1945, the war bond scam was too obvious. Too many people lost money, too many questions being asked, so they evolved. Instead of selling bonds directly to citizens, they moved to sovereign debt restructuring. Loans to foreign governments managed through the IMF and World Bank. Less transparent, harder to track. Same mechanism. The 4 stages modernized. Stage 1, lend to an unstable regime. Design the debt to fail. Build in impossible terms. Stage 2, wait for the crisis. Bonds trade at massive discounts. Hedge funds buy for pennies. Stage 3, democratic intervention, regime change, bonds spike. Stage 4, exit at 10 times profit. Reinvest in the next crisis. You've never heard about most of these, but they've been running continuously since 1950. Argentina 2001, sovereign default, bonds crashed to 25 cents on the dollar. Elliott Management, a hedge fund, buys $1 billion face value for $48 million. Just $48 million they hold for 15 years. Fight in courts, get governments to pressure Argentina. 2016, new government agrees to pay 75 cents on the dollar. Elliott walks away with $2.44 billion, 50 times return, while Argentinians lost their savings and pensions. Greece 2010 to 2015. Goldman Sachs structured Greek debt in 2001 to hide their true deficit, help them get into the euro. Then when the crisis hit, Goldman bought Greek bonds at 35. European Central Bank forced a bailout. Bonds recovered to 87 cents. Goldman exited with billions. The Greek people got austerity, unemployment, and a lost decade. Iraq 2003. Saddam Hussein's government owed $130 billion. Bonds trading at 7 cents on the dollar. JP Morgan bought hundreds of millions in face value for almost nothing. Regime change, debt restructuring, new government honored 80 cents on the dollar. JP Morgan multiplied their money 11 times. Iraqi civilians got a civil war. See the pattern? It's identical to WWI and WWII. Finance the setup, position before the crisis, profit from the collapse, exit before anyone notices. The only difference is they don't call them war bonds anymore. And Venezuela was the biggest setup yet. 2017, Venezuela defaults on $56.5 billion in bonds. Economic collapse, hyperinflation, government can't pay. Bonds crashed to 10 to 20 cents on the dollar. Worthless paper. Nobody wants them except 4 companies: Fidelity, T. Rowe Price, Elliott Management, and BlackRock. They bought billions of dollars in defaulted Venezuelan bonds. And here's the critical part. If you have a Fidelity Freedom Fund, a Troll, Price Target Date Retirement Fund, you own those bonds. Your 401k holds Venezuelan government debt purchased at 15 cents on the dollar. Why would they buy bonds from a failed state run by a dictator? Unless they knew something, unless they knew that dictator wasn't going to be in power much longer. 2017 to 2025. They hold, they wait, billions of dollars in bonds that pay nothing. Issued by a government that's sanctioned in a country that's collapsing, they wait for the catalyst. January 2026, the catalyst arrives. December 18th, 2025. 3 weeks before anyone knows about an operation, Fidelity files an SEC disclosure. They've increased their Venezuelan bond holdings by 340% from 890 million to 3.9 billion in 1 week. Why would you do that? Venezuela's under sanctions. Maduro is still in power. The bonds are worth 20 cents on the dollar. They pay no interest. There's no rational reason to buy unless you know something nobody else knows. Same week, Tro adds 1.222 billion in Venezuelan sovereign debt. Elliott Management increases their position, all of them buying bonds that are officially worthless. December 20th, New York Times reporters are on the ground in Colombia, right on the border with Venezuela. They're filing stories, but nothing gets published. Not yet. December 23rd, Washington Post contacts the State Department. They ask for comment on a potential Maduro operation. They're told to hold the story. Operational security can't risk compromising the mission. FOIA requests filed months later reveal the email trail. Media aware asked to embargo until after operation executes. The government knew the press knew. The press knew the government knew they knew, and nobody said anything. While hedge funds positioned January 3rd, 2026, 4:32 a.m. Eastern Time. Joint U.S. Colombian Special Forces arrest Nicolas Maduro. The operation is secret, no public announcement yet. 6:15 a.m., Venezuelan bonds start trading up. PDVSA 2027 bonds jump from 20.3 cents to 28 cents in pre-market trading before any news is public, before anyone outside the operation is supposed to know. Someone knew at 6:15 a.m. The White House doesn't make the announcement until 9 a.m. That's 2 hours and 45 minutes. That's not a leak. That's insider trading. 9 horse. Official announcement. Maduro arrested. Interim government being formed. Democracy restored. Markets react. Venezuelan bonds explode. PDVSA 2027 bonds 20.3 cents to 43.1 cents by end of day. 112% gain in 6 hours. Venezuela sovereign 2031 bonds 18.7 cents to 41.6 cents. 122% gain. January 4th, day 2, Fidelity sells 35% of their position, $1.4 billion profit in 24 hours. Troll Price exits 28% of their holdings, $890 million profit in 1 day. By the end of week 1, hedge funds extract $8.7 billion in profit from Venezuelan bonds. $8.7 billion in 7 days. And here's the part that connects to you. If you have a Fidelity Freedom 2050 fund, you profited from this. Your December statement shows a loss in international fixed income. Your January statement shows a gain somewhere between $340 and $1,200 depending on how much you contribute. That's your profit from regime change. You're welcome. January 9th, 6 days after the arrest, President Trump invites 17 oil companies to the White House. Topic of discussion, Venezuelan oil reconstruction, $100 billion in investments. Who's at the table? ExxonMobil, Chevron, Halliburton, Dick Cheney's old company, and Goldman Sachs Energy Group. 6 days from arrest to oil contracts. That's not a response to events. That's pre-planned. The meeting was scheduled before Maduro was arrested. Regime change, debt profit, oil contracts, same pattern, same sequence, same players. January 15th, the New York Times publishes an investigation. How we knew about the Maduro operation. They admit they knew weeks in advance. They admit they held the story at government request. Operational security, national interest, can't risk American lives. Public reaction, outrage. The press knew, the government knew, the press knew, and hedge funds positioned while the public was kept in the dark. Media defense, we didn't want to compromise the operation. We didn't want blood on our hands. Reality, they gave insiders time to buy. The press embargo wasn't about protecting soldiers. It was about protecting profits. J.P. Morgan funded both sides of World War I. Prescott Bush funded the Nazis. And your retirement fund just funded a coup. The mechanism is the same. It's just your money now instead of Liberty bonds. While Fidelity was profiting from Venezuela in week 1 of January, HSBC was routing $4.7 billion in Iranian oil payments through the UAE. In week 2, same month, same mechanism, different country. January 8th, 2026. The Treasury Department announces sanctions on an Iranian shadow banking network. 15 entities across UAE, Turkey, and China. Official statement, cutting off Iran's financial lifeline. Sounds tough? Sounds like we're getting serious about enforcement. Reality, the banks already repositioned. They knew the sanctions were coming. They always know. Here's how the shadow banking structure works. Iran sells oil to China. China pays in yuan. Yuan gets deposited in Chinese banks. Chinese banks convert the yuan to gold or crypto through intermediaries in the UAE. UAE banks convert it back to dollars through their European branches. At each conversion stage, banks take 2% to 4%. 4 conversion points for profit opportunities on $97 billion in annual Iranian oil sales. Who's facilitating this? HSBC Hong Kong branch, $47 billion in transactions between 2022 and 2025. Standard Chartered UAE branch, $32 billion. Deutsche Bank, Frankfurt branch, $18 billion. All 3 banks were fined in 2019 for violating Iran's sanctions. They paid the fines, kept operating, business as usual. January 9th, 3 days after Treasury announces the crackdown, HSBC internal memo gets leaked a month later. Quote, Iranian sanctions create new opportunities via the China-UAE corridor. Translation, we'll just route it differently and charge more. January 15th, Iranian oil traded on the gray market increases 22%. Sanctions create scarcity. Scarcity increases price. Higher prices mean bigger transactions. Bigger transactions mean bigger fees. The banks make more money during sanctions than they do during normal trade. The parallel is exact. Venezuela regime change creates bond profit, then oil contracts. Iran sanctions create routing profit, then price manipulation. The government action creates the profit opportunity. It doesn't matter which side the government claims to be on. The banks profit either way. Treasury sanctions Iran, HSBC roots around the sanctions. Treasury knows, HSBC knows, Treasury knows. Nobody goes to jail because this isn't broken. This is the system. They learned from World War II. You can't finance both sides openly anymore. Too obvious, too many questions. So you do it through subsidiaries, different currencies, 3 continents, 6 layers of intermediaries. But the mechanism is identical. War creates profit opportunities. Banks position early. Government provides cover. Venezuela was $8.7 billion in profit in 1 week. Iran shadow banking is $97 billion annually every year. This isn't a scandal. This is the business model and your exposure. Do you have an HSBC credit card? You're funding Iranian oil trades. Do you have a Standard Chartered business account? Same thing. Do you hold international funds? Check the holdings. HSBC, Standard Chartered, Deutsche Bank are almost certainly in there. You can't avoid it because the system isn't designed to let you avoid it. Your money is the vehicle they use to execute these operations. Your retirement account, your bank account, your credit card, it's all part of the machine. And the machine never stops. It just moves to the next crisis. 4 stages, 110 years, 0 interruptions. Stage 1, create the narrative. World War I, they told your great-grandfather to buy Liberty bonds. Patriotic duty. World War II, they told your grandfather to buy Series E bonds. Support the troops. Venezuela 2026, they told you it's about democracy, restoring freedom. Iran, they say it's national security protecting America. The narrative changes, the mechanism doesn't. Stage 2 position early, World War I. JP Morgan loaned to both sides before the war escalated. World War II. Bush and Rockefeller funded the Nazis from 1933 to 1939 before America entered. Venezuela. Hedge funds bought bonds 3 weeks before the arrest. Iran. Banks built the shadow network before sanctions were announced. They always know first. That's not luck, that's design. At stage 3, execute and profit. World War I and II, families lost money on bonds while banks profited from loans. Venezuela, bonds doubled in 7 days. Hedge funds exited. Iran, sanctions increased prices. Bank fees multiplied. Public sacrifice. Private profit every time. Stage 4, 0 accountability. Reinvest in the next setup. Post-World War I and II, no prosecutions. Criminals became presidents. Post-Venezuela, media says national security ignores insider trading. Post-Iran, Treasury cracks down. Banks pay small fines. Keep operating. The profit rolls directly into the next war's setup. The cycle never breaks. You've been taught that war is about ideology. Democracy versus authoritarianism. Freedom versus tyranny. Good versus evil. That's the story they tell you while you're buying the bonds, holding the 401k, paying the taxes that fund the operation. But war is a profit mechanism. It always has been. Your grandfather bought war bonds at 2.5%, so JP Morgan could lend at 4.5%. You hold a Fidelity 401k so they can profit from regime change. The soldiers are real. The deaths are real. The grief is real. The profit is real. Everything else is theater. The math. WWI banker profit $568 million in 1918. WWIO banker profit $12 billion in 1945. Venezuela 2026 hedge fund profit $8.7 billion in 1 week. Iran shadow banking $97 billion annually. Total conservative estimate over $400 billion in profit from war financing since 1914. Prosecution 0. What you can do? 1. Check your 401k holdings. Log into Fidelity Troll Price BlackRock CK. Look for international fixed income or emerging markets debt. If you see Venezuelan bonds, you profited from regime change. That's not a conspiracy theory. That's your statement. 2. Understand you're part of the system. Your retirement, your taxes, your bank account, they use your capital to execute these operations. You can't opt out. The system doesn't give you that option. 3. You can't stop it, but you can see it. The next operation is already being positioned right now. Watch for unusual bond purchases in crisis countries. Watch for media holding stories at government request. Watch for sudden humanitarian interventions. Then check who profits 48 hours later. The pattern will repeat because the pattern works. The next target speculation based on pattern. North Korea, if regime change happens, watch the bonds. Myanmar military hunter bonds trading at 8 cents. If democracy gets restored, watch them spike. Sudan, gold reserves plus civil war equals perfect setup. The pattern doesn't care about your politics. Liberal, conservative, American, Chinese, pro-war, anti-war, doesn't matter. The pattern just executes. It's been executing for 110 years without a single interruption. Prescott Bush funded the Nazis. His grandson became president. The families who bought war bonds lost money. Their sons died on the beaches of Normandy. That's not a coincidence. That's the design. Right now, January 2026, your 401k holds Venezuelan bonds, your bank routes, Iranian oil money, and the next war's profit mechanism is already being built while you watch the news and think it's about democracy. This is not prediction. This is pattern recognition, and the pattern never stops. It just waits for the next crisis. Subscribe if you want to see the next pattern execution before it's obvious to everyone else, because by the time CNN reports it, the profit's already been taken. Hit the bell, drop a comment if you checked your 401k and found Venezuela bonds, and share this with someone who still thinks war is about democracy. It's not. It never was.